So we didn't hit the July lows and we overshot the July highs. Like that's a great month in a strong uptrend. And I was watching very closely on Sunday night because Bitcoin trades a lot off of monthly candles. And I'm like, this is hovering right around this key point. Like, is it going to print a lower low than it printed in July? And honestly, it was like at midnight when we turned to September 1st, that was basically the bottom, like 108. And now, I mean, I don't know exactly what it's sitting at, 112. I mean, a nice move. Right? A nice $4,000 move in a couple of days. I was buying Bitcoin micro futures, on Monday because it's like, look, this is at 108. We held it. I think September looks like a strong month for Bitcoin. My original end of year target was 150. I still think we're going to get there by the end of the year.
Imagine buying into an asset today that experts say could climb to $300,000. Bitcoin's latest rally suggests that future might be closer than you think. Mel Mattison, an investor, author, and former fintech executive, believes Bitcoin is entering a powerful new phase that could drive prices far higher. With its classic cup-and-handle pattern projecting a potential target of $300,000, Bitcoin is being backed by multiple structural tailwinds that set it apart from every other asset class. Mattison highlights that central banks, which manage trillions of dollars, will eventually add Bitcoin to their balance sheets. Even a small allocation could transform the market, just as central bank buying has fueled gold's rally in recent years. Corporations are already adopting Bitcoin and governments, he argues, will eventually follow, because there is no true alternative. Unlike Ethereum or other digital assets that may outperform temporarily, Bitcoin remains unique. It was first, it is the largest, it has a fixed supply, decentralization, and an unmatched network effect. While he acknowledges long-term risks such as generational shifts or advances in quantum computing, Mattison insists Bitcoin is a once-in-a-millennium opportunity. Recent price action confirms his conviction, with August posting higher highs and higher lows, and September already showing strength. His year-end target remains $150,000. Just the beginning, he believes, of Bitcoin's next historic move. This is only the beginning of crypto's evolution. The most transformative changes are yet to come. Stay tuned, hit subscribe, and turn on notifications to catch every major move in Bitcoin, Ethereum, and the future of global finance.
I think over time, we're going to see central banks put Bitcoin on their balance sheet. I don't know when that happens. I don't know if it happens next year. But the amount of money we're talking about with central banks, right? Trillions upon trillions of dollars, like 10, 20, 30, 40x the current Bitcoin market cap. Like just a little bit of that is going to be, I think, a fundamental driver, just like a major fundamental driver of the gold move in the last few years has been central banks eschewing treasuries and going to gold. Eventually, they're doing it. We're seeing corporations begin to put Bitcoin on their balance sheet. And I think there will come a point in time, because I don't think there really is an alternative to Bitcoin. I mean, people can talk about Ethereum and the flippening. Ethereum can have a period where it outperforms, just like gold can outperform. I mean, Carvana stock can outperform Bitcoin for a period of time. Anything can outperform anything for a period of time. But Bitcoin is unique. Bitcoin is the first. Bitcoin is the biggest. Bitcoin has that hard cap. Bitcoin is decentralized. Bitcoin has a moat. Bitcoin has the network. It has the thousands, if not millions, of nodes around that make it functional. It has the history. It has the cost to produce it. It can't just be willed into existence by an Ethereum foundation. All of these things are just very unique. It will not be replaced in our lifetimes, I believe. I do think that ultimately a very long-term, perhaps, risk to Bitcoin could be maybe not the kids of Gen Z, maybe the grandkids of Gen Z. Say, our great-grandparents made all this money on Bitcoin. Let's create a new crypto, hard cap, just like Bitcoin. This is going to be the new generation of Bitcoin. And they really get behind it, and you start seeing, something drive or something there. But I think for all intents and purposes, there's only two threats I see to Bitcoin. One, very long-term, is that a generational shift. Two is, I do think quantum is something to be taken seriously. And I think that, look, it's probably a long ways away. Bitcoin, it uses SHA-256. It's a very hard algo to crack. Everything that everybody looks at with quantum says, this is a 10, 20, 30-year time period before we're going to get to some sort of, so I do think that needs to be addressed. The wild card there is if super intelligence comes into play and speeds up that timeline. And instead of 10 or 20 years away, it becomes 5 or 6. And then Google comes out and says, oh, we just established 2000 qubit quantum. And, if we just increase this much, it's going to be able to crack certain encryption algorithms, and people flip out about it. So I do think that's something the Bitcoin community needs to address. I think it will eventually. I don't think it's a short-term danger. I think the long-term danger would be just, something else coming up at some point in time. But I'm very doubtful that happens. I personally think Bitcoin is kind of a once in a millennium type opportunity, and there's not going to be another one. And it's going to have its ups and downs. And like last month, August was a great month for Bitcoin. People were like flipping out. I'm like, you had higher highs in August than you did in July. You had higher lows. So we didn't hit the July lows, and we overshot the July highs. Like, that's a great month in a strong uptrend. And I was watching very closely on Sunday night, because Bitcoin trades a lot off of monthly candles. And I'm like, this is hovering right around this key point. Like, is it going to print a lower low than it printed in July? And honestly, it was like at midnight when we turned to September 1st, that was basically the bottom, like 108. And now, I don't know exactly what it's sitting at, 112. A nice move, right? A nice $4,000 move in a couple of days. I was buying Bitcoin micro futures, on Monday, because it's like, look, this is at 108. We held it. I think September looks like a strong month for Bitcoin. My original end of year target was 150. I still think we're going to get there by the end of the year.
The age-old battle for store of value supremacy is heating up. Gold may wear the crown today, but Bitcoin is quickly rising to challenge its throne. Mel Mattison argues that the long-term investment case is straightforward. The US dollar is not a store of value. It functions as a medium of exchange and unit of account, but true wealth preservation lies only in gold and Bitcoin. While Mattison admits he loves silver and has invested in it extensively, he sees it as secondary compared to these two dominant assets. He recalls with regret failing to buy Bitcoin at $15 in 2012, finally entering years later around $11,000, yet remains confident in its trajectory. For younger investors in their 20s, Mattison stresses that Bitcoin's upside far outpaces gold's and will likely outperform over decades. For older investors in their 60s, diversification between both assets makes sense. Institutions and central banks, however, still lean on gold for reasons of privacy and national security. Unlike Bitcoin, gold transactions are not on a public ledger and can be melted down or recast without trace, preserving autonomy. Meanwhile, the market is reflecting this dual dynamic. Gold futures hit a record high Tuesday, even as Bitcoin climbed to record levels in August, with ETF inflows rapidly catching up to the safe haven metal. Let's get back to interview.
I think over the long run, it is that simple. I think in the short run, if you want to try to time things and stuff, some people are traders. I'm a trader, so I do make moves. I do try to play the trends. Other people that have a day job and can't spend all day in front of their screens and looking at this stuff like I do and listening to all the commentary and, it really is that simple. And I think, in my mind, like, there's no debate about like dollar is some sort of a store of value. It's just not a store of value. It is a means of transaction. It is a unit of account. That is what the dollar is. I think anybody with a brain has understood that for a long time. I think it's becoming completely obvious now. And I think what you say is, what are the stores of value out there? And there's two preeminent stores of value, and they're gold and they're Bitcoin. And there is no other. Like, silver is good. Don't get me wrong. I love silver. I have silver all around me. I literally, this is a 10-ounce silver. I have my microphone sitting on a 100-ounce silver bar. I love silver. I'm not kidding. This is 100 ounces of fine, silver, which I bought for like $1,000. It's now worth over 4,000. I love precious metals. I was into precious metals, long before Bitcoin existed, because I was always a historian of economics. I understood central banks. I understood fiat. One of the biggest regrets of my life was the first time I found out about Bitcoin in 2012. I tried to buy it. It was before Coinbase. I was trying to set up a browser. I was trying to get into whatever I needed to do to get my hands on it. And I didn't try hard enough, and I just forgot about it. And like a couple years later, Bitcoin's out, and I'm looking at it, and I'm like, oh my God, $1,000. That's ridiculous. Like I was trying to buy it when it was like 15. Like, like this is crazy. And eventually over time, and then I started to understand, no, this thing's got traction, and bought my first Bitcoin when it was around 11,000 a coin, not as early as it should have been for me. But, there are these two. That's it. And Bitcoin offers certain things that gold doesn't offer. I do think gold offers certain things that Bitcoin doesn't. Well, I think it depends. I mean, like if you're 25, I think over the long run, I mean, the percentage return, if you're looking at what am I going to have when I'm 55, 65, I think Bitcoin's going to kill gold. But if you're in your 60s and you're thinking about keeping your store of value, and I think being diversified, and even if you're 60, owning some Bitcoin, owning some gold makes some sense. I also think if you're an institution, if you're a central bank, there are reasons why gold makes sense. Okay. So number one is it's not on a open ledger, right? So if there's a massive wallet that the PBOC, the People's Bank of China, holds Bitcoin in and makes a move, that's publicly available, right? If India wants to send something to China and do it through bullion, no one knows, right? Not only that, but that bullion can be completely melted down and recast, and no one knows where it came from. It's absolutely untraceable. There's no ledger. It's so certain things from a national security perspective and an autonomy perspective, I can understand why central banks, along with the historical nature of gold as a store of value, why they appreciate it.
The financial landscape is entering a decisive phase as gold and Bitcoin emerge as the two strongest pillars of value preservation. Gold retains its irreplaceable role for institutions and central banks, offering privacy, history, and security that fiat cannot provide. Bitcoin, however, stands out as the asset of this generation, driven by its hard cap, decentralization, and powerful network effects. With both assets surging to record highs, investors are being pushed to reassess traditional approaches to wealth protection. In an era of weakening fiat currencies, embracing the dual strength of gold and Bitcoin may prove to be the defining strategy for long-term resilience. As gold and Bitcoin race to new highs, which will you trust more to safeguard your wealth in the years ahead? Crypto is rewriting the rules of global finance. But in a market full of noise, only disciplined investors who stick to fundamentals will win. Stay tuned, and don't forget to like, share, and subscribe for more powerful insights into the future of digital assets.